Hey traders, welcome back to another video. Today I brought something that most of you can relate with, an easy solution that will get you consistent profits in your trading, because winning one trade and then losing 10 in a row is not ideal for any type of trader. So in this video, I'm going to share with you the exact solution that I used in the beginning of my trading career. And I can promise, if you follow this step by step as I show you in this video, you will also be able to generate profits consistently. So without any further ado, let's get started. So the first thing that you have to do in order for this strategy to work is you have to focus all your energy on a single currency pair, because when you're jumping between currency pairs, you will not be able to see natural patterns that form inside them. So I would suggest you just take one currency pair and stick to it. In this example, I'm going to take the GBPJPY as an example, and you can use this exact strategy that I'm going to show you to profit in GBPJPY pair. So in my experience, what I have seen in GBPJPY, I have seen the formation of these two patterns time and time again, and above 90% of the times they are correct. So these patterns are, first, this is the ascending triangle pattern, then the second one is the descending triangle pattern. Now let's talk about them a little bit in detail. So the ascending triangle pattern, it acts as a continuation pattern, and in this example the trend is already bullish in direction. So for example, here we can see that trend is moving in the upward direction by the formation of these higher highs and higher lows. Then at this resistance zone, a lot of price action happens and the price falls down immediately. But after that, it recovers to the same level and again it meets this resistance. You can compare this with the bouncing of a tennis ball. For example, in the first bounce, the ball reaches its maximum height. But with the next bounces, we see the height of the bounces decreasing, hence the smaller and smaller waves form. And at the last bounce, the ball has the smallest amount of energy. That's why all the energy or the potential energy that was in the bouncing of the ball has vanished. And this is very similar to what is happening in this formation of ascending or descending triangle patterns. And in Forex trading, when you match the natural patterns with the price action, they work out very well. Because of this activity, we can see that the prior trend was bullish, but at this resistance zone, the price started to make these swings. Now, with the formation of each next swing, if you look closely, the swings are becoming smaller and smaller. Hence, these triangles are becoming smaller and smaller. As you can see, this is the biggest one, then there is a smaller, and then this is the smallest one. So at this resistance zone, we can see the market testing this zone again and again, and the swings are becoming smaller and smaller. Now, what does this suggest? The momentum that sellers found here in the first triangle is fading out. So the market, once this resistance zone breaks, the market is ready to carry on its previous momentum that was there in the earlier, in the beginning pattern, formation pattern. So this is the psychology behind trading the ascending triangle pattern, that prior trend is bullish, and at a resistance zone, after testing the resistance zone multiple times, if there is a breakout with a big bullish candle, then this is a good indication that trend is ready to again move in the bullish direction, because the momentum that sellers found at this resistance zone has been overcome by the formation of this breakout from this resistance zone. Now let's talk a little bit about this descending triangle pattern. Now this is same but opposite. So what happens is, in a descending triangle pattern, the prior trend is bearish in direction, and then there's a formation of these swings or these triangles at a support zone or a demand zone, and they become smaller and smaller with time. So what happens is that with the formation of these smaller and smaller price swings, the momentum of buyers is fading out at this support zone. So that's why when this support zone breaks with a very big bodied bearish candle, that suggests that the trend that was already available in the market is ready to continue to move in the downward direction. So this is the psychology behind trading a descending triangle pattern. Now let's go towards the charts and take a look at some of the trades that I have taken using this strategy. So here you can see I am at 15-minute time frame, and we can see the formation of the same ascending triangle pattern that we have discussed earlier. So in ascending triangle pattern, what's happening is these triangles are forming below this resistance zone and they become smaller and smaller with time. The prior trend is bullish in direction, as we can see here. The prior trend is in the bullish direction and moving in the upward direction. Then there's the market meets this resistance zone, and then there's the formation of these smaller and smaller swings. Now with these smaller swings, what we can see here is the breakout candle that breaks this resistance zone is a very big bodied bullish candle. Now this candle suggests that the sellers have lost momentum and buyers are again in control of the market. So that's why there is a high likelihood of market moving in the bullish direction. So that's why we will take this trade and we'll put our stop loss at the below the low of this last swing, the smallest swing. So our stop loss will go here. We will take the entry at the close of this candle, this big bodied bullish candle that breaks the resistance zone. And to decide our target or take profit level, what we have to do is we have to measure the number of pips in the first swing, the biggest swing at the beginning. Now here we can do that by just drawing a line from here to here, and then we can just extend this line, take this line and put it here, and then we can close our trade where this line ends. So we'll take the same number of pips that are available in the first swing, and that's exactly what we have done here. So you can see after breaking with this big bodied bullish candle, the market has continued to move in the bullish direction until it hit our target level. So that's how you trade using this ascending triangle pattern. Now let's go ahead and take another example of a descending triangle pattern. Now in this example, again, we can see that there is the formation of this bearish trend prior to the formation of these waves and this resistance zone, and this bearish trend suggests the market was moving in the bearish direction with very high momentum, but it met with a support zone or support key level here. So what happens is there's a formation of these smaller and smaller triangle swings, and these swings are fading out with the passage of time. Now when the market breaks this support zone with this formation of very big bodied bearish candle, that suggests that this support zone is not valid anymore and the sellers have already gained momentum, so they are gonna move in the bearish direction. So in the same way, we're gonna put our stop loss around here. We're gonna put our entry at the close of this candle here, and what we're gonna target is we're gonna target the number of pips that are available between the first swing. So we're gonna measure this from here to here, and then we're gonna take this same length and take this as our take profit level from the zone. So that's how you decide your take profit level, and that's how you trade the ascending and descending triangle patterns. Now the beauty of these patterns is they work above 90% of the time, and using these patterns you will be able to take consistent profitable trades. Now I hope you were able to understand the concepts behind using the ascending and descending triangle pattern, and I would suggest you to highly use these patterns within GBP/JPY pair, because as I said in the beginning of this video that I have seen the formation of these patterns in GBP/JPY pair in my experience time and time again. So they will lead to consistent profits if you follow the steps and if you add the confluences that I have shown you in this video. I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video. Thank you.